Hi, I'm Whack.
Hey, and I'm Pat, and thanks for joining us for another episode of the Weekly Orbit, week ending Friday, March 29th. We're going to try to put together a great show today, 40 minutes or less, focusing on markets, but we got a special guest today, Whack. We're bringing in Samus to talk tokenomics a little later in the show. But first, I got a couple comments about you breathing into your mic, and I said, Whack, he gets excited when talking about RPL price. He starts panting, so you got to forgive him.
It just does something to me, like it makes me feel all warm and fuzzy. But no, I'm also like, I have a side gig as a ASMR artist, so sometimes that just carries over into my day job.
Wow, it's I'm sure our listeners will appreciate the heavy breathing. Hopefully that'll pump the price up. Anything that we can get the price of RPL up and ETH, I'm all for.
Okay, I'm going to leave it at that because there's definitely some jokes that can be made there, but they might not be suitable for this audience.
Okay, so speaking of prices, let's take a look at Ethereum. It's been a flat week. Okay, last week when we talked, we were right around, we were at 3,517. Right now we're at time of recording, 3,563. It's been a flat week. We're kind of in a crab here, I would guess you would say, in this 33 to 3,700 range. Any comments on Ethereum?
Yeah, like it's kind of bleeding against Bitcoin a little bit. The ratio against Bitcoin's come down, which is not good. But other than that, Ethereum's price has been like chill. Tokens here and there are pumping. Like, we had real world asset tokens pumps, and we had some AI tokens pumping. So there are, it's still bull market. It's just not Ethereum's turn right now, and we're just going to wait for Ethereum's turn. So hopefully it'll come soon.
Yeah, I was looking at the BTC ETF inflows, outflows. The last few days, there's been a net outflow. So with BTC, maybe the rush of getting in is starting to subside a little bit. We'll have to see, but
I think that was last week. That was with Grayscale. They were exiting more BTC, but this week in the last few days we've actually seen the inflow start again, and now BTC is back above 71,000. So it's kind of reflected. That's reflected in that. So
weird with Grayscale. They're just losing market share every day, a percent. They're down to, I think, 41%. At one point they were at 100%. And,
of course, yeah.
And their expense ratio is so high. It's 1.5%. Now that's lower than it was 2.5% prior to the ETF, but compared to BlackRock, Fidelity, and the other ones, which are, around 0.2%, 0.2, I'm sorry,
some are at zero.
Some are zero for 6 months as an intro. Folks are moving it out.
I think
I don't know what their business plan is, but
they've got a captive audience, like people, if they think that, if they leave, they're going to have to pay taxes, or they might be in some kind of account where they can't move their assets frequently. So they're just trying to get whatever fees they can out of those people for as long as they can. I think I saw some rumblings that they're starting another ETF, which will be like one of those low fee ones. So to keep the people who are trapped in there for as long as they can, and then get a new one to kind of get new people coming back. But it's really scammy. Like, it really feels icky. So like, yeah, I don't have a positive opinion of Grayscale in that sense, but yeah.
Sure. Let's look at RPL price. Right now we're at $31.96. In terms of the ratio, last week we were at 0.0081. Right now we're at 0.0089. So that's about a 9 or 10% increase in the RPL ETH ratio, which is good.
Yeah. So I think last week, we actually went down to a new cycle low. So this was, lower than the lows that we got in 2022, summer 2022, when we hit 0.0075. I think I saw a transaction go through at 0.0074, which was disappointing. We've bounced back fairly decently since then, but we're still kind of like in that 0.9 kind of area, 0.009 area, I meant to say. Hopefully we can build a base here and like try to move up. Like sadly, it's just we're not catching a bid right now, so it's kind of disappointing in that sense.
Yeah. Although I have to say, seeing a nice little bump in the ratio, over the last week is encouraging.
Yeah,
So
but
I think it's a good thing.
if you zoom out though, it's looking
Of
really
course.
bad. Yeah,
Sure.
like if you go to like
Right.
1 year, then
Yeah.
it just is down only. Like the purple line on the screen is the ratio, right? And
Yep.
that peaked just over, well, it just peaked just over a year ago. But since then, it's lost like 75%, 66% of its value, 70% of its value. And I'm hoping that we can. I feel like I felt like we had kind of a base, from pretty much from November to January kind of thing, around the 0.011 kind of area, and that kind of like was at the level that we were at pretty much around mainnet launch and for a big chunk of time after before the Atlas pump. So it kind of made sense that we were kind of like building support there, but we weren't able to hold it. And then it makes sense that we then go down and test the next level of support, which was the cycle low. And at the moment we've held it. Like I just want us to get bounced back up to that 0.012 area. I feel a lot better there than I feel here, because right now we've not shown any sign of there being a reversal. But of course, we're just a month and a week away now from, well, a month and maybe two, just over 6 weeks, basically under 6 weeks for Houston. So I'm really hoping that is, the beginning of the next wave of catalysts for Rocket Pool. Let's see how it works.
Right. Yeah. And hopefully over the next 12 months, we've got several of those catalysts. We got Houston, we've got maybe node set, Saturn 1, Saturn 2, so there'll be a narrative around Rocket Pool, and people will peak, their interest will peak, and people will start buying.
Yeah.
One of the things that we've talked about is tokenomics. Okay, so we're bringing in our special guest, Samus, who's doing some shoe leather reporting on tokenomics. Samus joined us at ETH Denver, as some viewers may recall. Samus, thanks for joining us.
Ready to be here and have a conversation about tokenomics.
Yeah, before we get into that, do you want to just give us a short background on your who you are, what you're doing in Rocket Pool, and then we'll go into tokenomics.
So who I am right now, electrical engineer by day trade. So that's funny. I watched Dune 2 recently. I don't know if y'all seen Dune yet, but yeah, talking about like he who harvests the spice controls the universe. Yeah, so I'm working the semiconductor industry, so it feels that way with silicon at times. But I do that during the day. I got involved with Rocket Pool kind of on the side, and I've really enjoyed it, especially this past 3 to 6 months. I was kind of a lurker in the community, and then there was a research bounty that went out specifically around tokenomics after Lido announced their CSM that they were scheduled to want to implement this year.
Yeah, and since we talked to you, so to give us a kind of a chronological order of where we're at with tokenomics, for started, I always like to say Wack had his rant about Lido CSM, and Rocket Pool better get off its butts because we need to compete. That was back in, I think, in November. And then we had some lively Discord talk, and then we had a bounty for the GMC to come up with ideas, of which, Samus, you participated in. Then we came up with a whole bunch of proposals, and then you and Valdorf kind of worked together to create a cohesive proposal of several things. And then that's been tweaked and modified. We are now to the point where we've kind of come off Discord, and we have the proposals have been put onto the official forum. And now we actually have some draft RPIPs, number 42, 43, 44, and 45 that are before us, and quite a bit of discussion going on too. So having said that, why don't you, if we could start at the 30,000 foot view, where are we on the tokenomics today?
So overall, things are ready for community feedback. So we've kind of distilled down our core ideas into RPIPs. Val wrote up some specs and specific implementation ideas. And at this point, we want to talk to the team, find out what's realistic, and what concerns they might have, and then also talk to the community, see where do people have any disagreements with it, do they have any alternative ideas, and start to engage on that front. But things are at a state where there's a call to action for the rest of the community to get more involved as well.
Yeah. I like the idea of the simplicity of this, because this stuff's really, this can get really complicated fast. But, you know, if there's that narrative, like you said, people understand the burn. I mean, that's one of the big memes of Ethereum is like, oh, we got the burn. There's ultrasound money, right? And people understand that, and you don't have to explain it. They always say, there's an old saying, you know, if you're explaining, you're losing, right? So I kind of like the simplicity of it. In terms of the burn, what are we talking about here in your projections? Is the amount of burn significant? Is it really going to make a dent? Because we're going to still have issuance of new RPL. Have you modeled this out? And if so, what can you tell us?
Right. So there's a document you could link to an Excel sheet that works out some example numbers, but the key factor with how much RPL gets burnt is the price of RPL. So what is consistent is how much ETH buy pressure there is, and that is directly correlated to our TVL. So how big has the protocol gotten? How much revenue are we earning? That's a larger amount that goes towards the burn over time. But if the price of RPL is lower, then that's more RPL that gets bought and burnt. And as the price of RPL goes up, now there's less RPL that's getting bought and burnt. So just some quick examples. I'm just looking at the sheet I have now. Looking at today, if we were to start, there's about 2,500, so like 2.3K worth of ETH going towards buy and burn. And
that's
would
on
equate
an annual basis, right?
Right. Sorry. Yeah, on an annual basis. And so that would equate to, when I had made this, around 240,000 RPL that's getting burnt. And over time, as we scale, and I also kind of accounted for the price of RPL going up, we're getting close to 700,000 to 1 million RPL getting burnt per year. But again, it depends on the price. So if the price of RPL doubles, now you're burning half as much ETH, or half as much RPL. So really need to play with the numbers and see what assumptions you want to make. But the important thing is it definitely is enough to be able to offset funding the DAO, that 1.5%, if we still want to allow RPL emissions to fund the DAO. But we do need to decide as technically independent variables. Do we want to keep inflation, and by how much, keep emissions or issuance, or do we want to try to fully commit to deflationary meme and burn as much RPL as we can, go Justin Drake style? So
it's really interesting how, oh, go ahead, Wack.
I was going to say, this is the kind of input that you guys want now, right? Like, you want these people to be coming into the forum and like kind of sharing these ideas and thoughts. So that's what we want from the community now, is like, come and share your ideas. Go ahead, Pat.
I like the idea of how when the price of RPL goes lower, the amount of RPL being bought goes up. So it's like you get a buy pressure just when we kind of need it. So when you need kind of a little price support, a little bit of buy pressure, you'll get more of that. And as the price of RPL goes up, you get less of that because you don't need, we don't need it as much because the price is going up. So it's kind of interesting how that balancing act works and how that could be beneficial in the long run.
Yeah, and I think one way to engage with this, if you're trying to set some type of floor value for what is the value of RPL at its floor, there's going to be some premium speculation on top of that. But when you look at the new tokenomics, you could define that by how much ETH are you earning if you decide to hold RPL. So there's some amount where at full maturity, for example, you could choose to stake ETH and earn solo staker ETH APR or commission, so that's, call it 4% is what your APR is. Or you can choose to buy RPL and you don't even have to stake it. And if that is earning you, quote unquote, 8% APR for ETH, maybe it becomes rational to buy some RPL. And you have to account for, there's price risk. RPL could change. It's more volatile. It's less liquid. But there's a certain point where it's going to be attractive enough to some people that they say, I want to get that ETH APR. It's worth taking on that risk. So how much, I put a multiplier in to say, how much more APR do you need to earn for it to be worth it? And you can play with some assumptions, but ultimately it should track to some floor value associated with the amount of ETH that you earn, is one way to look at it.
Interesting. There's been some feedback. So one of the questions that came up was would removing this, it's like having to be a node operator, you had to purchase RPL. And with the new tokenomics, that's not necessarily true. You could be an ETH only node operator. So there's been some concerns that were brought up about, could this be a centralization risk for Rocket Pool? Could big, huge players come in and say, wow, look at the additional yield that we can get staking with Rocket Pool. And now we don't have to worry about RPL. We don't want to hold that on our balance sheet. So we could just come in and just take up all the space within our market share. We could hit 22% market share, let's just say. And that would squeeze out small node operators. And we'd end up with just really big ones dominating Rocket Pool. So what's your response to centralization concerns?
Right. I think there's probably a couple assumptions in the way that question, as you're approaching that, is this centralizing or not? One of them is how much leverage is there out there for, say you have somebody like Coinbase, not that I would think this would happen, but they say, we're going to take all of the stake that people deposit on Coinbase and we're going to deposit it into Rocket Pool and earn commission. And basically each ETH that we deposit, we're earning a bunch from Rocket Pool depositors. But there's an assumption there that you have unlimited demand for our ETH. And if you're at a LEB 1.5, for example, you only put it in 1.5 ETH. Now you need 20 times that amount of our ETH demand if you want to actually leverage up in that way. And so you're saying Coinbase puts in 1.5 ETH, and now there's 20 times more demand from the rest of the market to buy our ETH instead. So first of all, I don't know that that's actually going to be true. There's a limit to how much you can get leverage because you're basically taking commission on people who don't take leverage. But if you disregard that point, now it comes to, is it centralizing to allow ETH only versus requiring RPL? And you're kind of making the assumption that the only people who buy RPL are decentralized actors, and that centralized actors will never buy RPL. And so maybe that's true. Let's just go forward with that assumption. That is still manageable under the proposal because we have different cuts of how we're distributing the protocol revenue. So you have some that goes to all node operators, call it the node operator share. And that's the only thing you would earn as an ETH only node operator. But then we have some commission that's going towards a voter share, which requires staking RPL. So there's a RPL requirement to access that revenue. And then we also have some amount that goes to the burn, which goes to all RPL holders. So for example, we could set a node operator commission to be lower if there's such a strong demand for ETH only node operators. Well, then just make them earn less. And then you take the revenue that they're generating and give it to the people who are buying RPL. And now eventually they're going to be incentivized to go elsewhere to other places that they can earn more yields. We're not going to be the only people offering permissionless ETH only pools, for example, like Lido or wherever else you want to go with that. So I think that can be managed by setting heuristics if we want to, like how much ETH only pools do we want, if that's something we want to consider. But I kind of disagree with that assumption in general because I think it's the cost of capital and we're a permissionless protocol. So as long as people bring the capital, I think that's what's important in terms of taking over the protocol or not. We can't force people to decide whether they're centralized or not. And then the best we can do is say ETH only versus RPL and ETH, but somebody as a centralized actor could buy a bunch of RPL and stake it as well. So it's only so much you can do if you're permissionless, right? Yeah. I don't know if that answers the question. Yeah.
Yeah. Samus, there's a whole bunch, there's 7 different RPIPs here, right? And one of the things that you're talking about is we can mix and match, and some things might come sooner, some things might come later. Like, where is that discussion standing on, and like, what do some of the timelines look like?
Yeah, so RPIP 49, that was one that's in a draft. Val linked it on the forum. It has kind of the overview, almost like a meta RPIP on informational, like what are all the proposals and what order. There's a section that's called potential deployment scenarios. So we look through practically if we wanted to implement these proposals, in what order should we do them, and which proposals should we group together into each release. So I think you look at, there's A, B, C, D. A is let's release all of them at the same time. That could take a long time. So I think, and there's a lot more technical risk to release everything all at once. So I kind of doubt that one is true. Looking at the rest of them, one thing that's important is Megapools are almost rewriting the code from scratch. Like it's a completely different framework for how the validators are structured and how the pools are structured. So if we're going to do that as the first thing, no matter what, because if we don't do that, we're asking people to join some kind of fixed thing for a really short time, and then there's a lot of gas costs to spin up a new pool, and then you're going to have to exit it pretty soon when we release a mega pool. That's just a lot of gas cost, and for what reward, it's probably not worth it. So I think mega pools would have to be one of the first. It would have to be the first change that we include after Houston. And so once you include that one, it opens up. One example I like is scenario C, which says megapools. We force to remove operator gated upgrades. So instead of making it optional to decide, do I upgrade my validator or not, after a certain amount of time, potentially you are forced to upgrade it. And then basically doing the RPL burn and universal variable commission. So we're lowering our bond to maybe 4 ETH, and we're getting mega pools, and we're getting the burn and universal variable commission. And then we do a follow-up release later where we do lowering the bond further to down to 1.5s for sublinear bonding and forced exits. So that's the one that I like and could see being realistic, but some of that depends on the team, and it definitely depends on governance first. We would have to vote for these and as a community to decide this is the direction we want to go.
Last night Ken hosted the chit chat, and Langers was the general manager for the team, and was asked about megapools and the design specs. How far out are we? And he speculated perhaps 6 to 8 weeks they could have the design specs. That's not in stone, because he said he had to consult with Kane, who's a smart contract developer for the team. Mm-hmm. So let's say it takes, say 8 weeks, it takes 12 weeks, right? So that puts us out 3 months. And then from there, they'd start building the new smart contracts, mm-hmm. and then have to go through an audit process. So in terms of timeframes, I would think we're a while down the road here before megapools are a reality.
I think we have to keep in mind some competitive pressures that Lido CSM, they wanted to release by end of this year. And I think the longer that we take after they have released Lido CSM, the more risk there is that rational actors will leave and go to where they make more money. Mm-hmm. And that's a risk. And so the sooner that we can get something competitive out there, the more important. But it's up to kind of governance. We can work in parallel to make sure that we as a community know that what we want, and we're aligned on that, and have all the feedback that we want to provide the team. And then it's a matter of them, implementing, testing, audits. But I would think, I doubt it would happen like in the next 6 months. It would take time to implement and test, and
Right. It seems like from just a quick read of the comments, there's the overall theme from a lot of folks is let's just whatever's the fastest, let's get something out the door. Let's get some momentum. Don't let the what perfect be the enemy of the good. I mean, obviously we want safe contracts, right? But in terms of the order of things, if we can get just something out there to show the community that we're, making progress instead of waiting a year to put out everything.
I think that's where it's tricky. Is there anything that we can do before Megapools that we would want to do before Megapools? And without Megapools, it means every pool you put up has its own contract, its own gas to spin up. And that's going to have a cost both to spin up and to spin down and then to join a Megapool once it's released. So is it, as a rational actor, are you going to choose to exit what you have to go join an interim stage for 6 months and then to exit that again to then go into Megapools? It's hard for me to see any scenario where we release something without Megapools in the near future. And then at that point, it's like, once you're doing Megapools, there's a lot of room so you're starting from scratch. You can put in the other things that we need, and it's not necessarily marginally that much more work than just releasing Megapools itself. So I think it might depend mostly on that one, and then just how fast can all that be implemented and tested.
Yeah, it's been hard enough just to get folks. There's thousands of LEB16s. The legacy LEB16s still sitting there who haven't converted. They have plenty of time, and there's probably different reasons for that. There could be those who they kind of stake and forget. There's the people who are like, I don't feel like spending the gas. I'm making enough. Or maybe they're like, you know what? I got this. I have enough padding on my amount of RPL collateral. I don't want to reduce that and risk not getting RPL rewards. I mean, there's a whole bunch of reasons. But what you were going back to what you said earlier, there's going to be forced upgrades, you think, in the future where you're not going to be able to just sit on the old contracts. You're going to have to migrate over. Is that, did I hear you correctly?
Right. There's a lot of technical debt to make sure everything is reverse compatible always. And also to recognize that we may not get things right in terms of what is competitive to the rest of the market. And you get into a little bit of game theory, like tragedy of the commons, where what if there's an upgrade that is beneficial for the whole protocol to do collectively, but as an individual node operator, it's rational for me to go ahead and stay on the old thing as long as I can until I'm forced. So eventually we want to have something that we can turn the whole ship as a protocol without relying on giving something more incentivizing than the previous example for every individual. That just may not be realistic or possible.
Yeah.
Okay, so go ahead, Mac.
Yeah, I was just going to say that, like, in the last couple of days, we've had some criticisms of this plan that you and Valdo have come up with. Like, where does that put us, and how's that impacting things?
Yeah, I encourage everyone to become informed, read, make a decision on. I would think there's 3 avenues. You keep the status quo. I'm okay with the same thing, and I want to keep the same thing as is, basically. There's the proposal we put forward, or there's an alternative proposal, alternative idea. And so if we assume, I don't think very many people want the status quo, we could probably throw that one out, most likely. Now it's, do you have a qualm with a specific detail in the proposal we suggested? Then provide feedback and say, I like most of it, but there's this one part that, I don't know, maybe we should consider this instead. Or if you really don't like, as a whole, the ideas, then put forward another idea that you want to get behind and stand behind of what is a potential alternative solution. Because ultimately, if you don't like the status quo, but you don't like the idea, then you just don't like anything, and we can't move forward as a protocol that way. So if we have a new idea that we can kind of compare and then decide as a community, that's what would be most helpful, I think.
Excellent.
Well, thanks, Samus, for joining us, giving us the update. Appreciate your time. You've been generous. If you're listening, please participate in the forum and the comments. In the show notes, you'll find the links to the Tokenomics rework draft, but also I've got a link here for NodeSet's review of RPL Tokenomics. You may take a read of that too, and give your comments. It's important because this is probably the biggest, arguably the biggest change to Rocket Pool that we're going to see. And this is going to map out either success or failure. It could potentially result in failure of the protocol if we don't get this right. So it's really important. You got something to share. This is the time to do it. Don't wait till the last minute. So having said that, thanks for participating. Thanks for listening and watching, becoming and being part of the Rocket Pool community. Until next week, we will see you. And Samus, we'll see you online, and perhaps we'll have you back for another show.
Sounds great.
Thank you so much.
See you guys later.
Okay. Take care.
Bye.